Good morning, my dear students. Today we shall pass on to unit number 8, financial statement analysis. Today we are going to see what is a financial statement, how the financial statement is analyzed. We shall see it in the next class. We should know something about the financial statement and what is a financial statement. In any business concern, there are too many transactions. What are the plus and the minuses of those transactions? Whether the transactions are profitable one or a loss one. What are the assets and liabilities of the business? What are the cost of manufacturing? How profit and loss account is prepared? How balance sheet is prepared? All these things are talked about in this financial statement. So generally, financial statement includes, if I say simply, the manufacturing expenses, profit and loss account, trading profit and loss account, and the balance sheet. These are the three important items which are prepared under financial statement of any business concern. That is the meaning of this. So, what is a financial statement? Financial statement of a concern is talking about the plus and minuses of the business. What do we mean by plus and minuses of a business? Whether there is a profit for the business or loss for the business. Whether it is the accounts are maintained properly or not. If the accounts are maintained properly, then what is the cost of manufacture? And what should be in the final accounts? That is how the trading account is prepared, how the profit and loss account is prepared, how the statement balance sheet is prepared. All these things includes the financial statement. And before analyzing this statement, we should know what are the features of the financial statement. See, I am not talking about this analysis now, later. We are talking about only this financial statement, only regarding the statement. Only after knowing this financial statement, what it is, using different methods how this statement is analyzed, we will see it later. Okay, here, what are the features of this financial statement? When it is prepared, when a financial statement is prepared, once in a year. It may be, if the business has begun in April, it may be prepared at the end of March. If the business has begun in January, the statement may be prepared at the end of December. If the business is started in July, then the statement will be prepared in June. Therefore, it depends upon the duration of the business. That is, whatever the duration it is prepared at the end. What it is, end, that is January to December, or April to March, or July to June. July to June. Then, during this period, only at the end, if it is January to December, at the end of January. If the duration of the business is April to March, at the end of March. If the duration of the business is July to June, at the end of June, this financial statement is prepared. I said, what does the financial statement consist of? The financial statement consists of the manufacturing cost, that is manufacturing account, then trading account, profit and loss account, and the balance sheet. All these items are prepared. Yes, when there is a concern, the financial statement is not prepared part-wise for a particular section, and if it is for section A, if it is for section B, not like that. For the entire organization, the financial statement is prepared. That is on the whole, for the whole organization, only one statement is prepared, and that is why this feature is as a whole. This statement, financial statement, is prepared as a whole. Once the statement is prepared, what should be borne in mind? The items of similar nature. If it is regarding the purchase, all the purchases. If it is regarding the sales, all the sales. If it is regarding the purchase of assets, all the type of assets. If it is regarding the liabilities, all type of liabilities. And therefore, all the types of items of same nature are collected together, and all the items of same nature are collected together, and keeping them ready only, the statement is prepared. Therefore, grouping of similar nature, that means the same type of assets, that same type of liabilities. Say for example, building, purchase of a building, and cash invested, and the loan borrowed from different financial institutions, say the liability, and therefore with all these similar nature items are collected together and they are considered for the preparation of financial statements. And there should be some basis. How, on what basis the statement is prepared? What happened in the past? What was the nature of the business in the past? What is its current rotation or current collection of the business? All these things are considered here for the preparation of financial statement. For that, what they do, what happened, suppose this is 2020, what happened in 2010, what happened in 2015, what happened in 2018, all these things are considered. Based on those information in the past only, the statement is prepared. This is called the historical cost. Historical cost, that is the cost of the product in the past. In the past, what had happened in the past. By bearing this point in mind only, the statement is prepared. And while the statement is prepared, what are the things they should bear in mind? They should bear in mind. What should be borne in mind? They should strictly follow the accounting principles and standards. We have seen already what is the accounting principle and standard. There is a principle that when goods are purchased, we use the term purchases account data. It is the principle, accounting principle. And if it is for goods sales, goods are sold away, then we should use the term sales account. If the cash or the goods are taken for personal use of the proprietor, we should use the term drawings account. These are all some principles and standards. In addition to that, we fix some rules. Say for example, traditionally what we do, the sun rises in the east and sets in the west. So why? Who told you? No, we are traditionally following it. Our forefathers told the sun rises in the east. Suppose had they told us the sun rises in the west, we will follow it. Whether you are understanding it or not, I don't know. Sun வந்து ஈஸ்ட்ல தான் ரைஸ் ஆகுது அப்படின்னு சொல்லியிருக்கிறாங்க. We are following it. Had they told us நமக்கு வந்து வெஸ்ட்ல தான் sun rises அப்படின்னு சொல்றாங்கன்னு வச்சுக்கோ, what we will do? We will follow it. That is what they say in accounting principles. See, we have seen three rules of golden rules of accounting: debit the receiver, credit the giver. Had they told debit the giver and credit the receiver, had they told like that, we will follow it. That is called here principles and standards. Here, what do they try to say? Certain principles are maintained, certain rules are followed, and those rules only should be followed. And that also uniformly throughout the world it is followed. India மட்டும் இல்ல, everywhere throughout the world it is followed the same rule. Debit the receiver, this is the only rule. Credit the giver, that is the only rule followed throughout the world. Then alone, a product from India, that is a person from India who is educated in India, can work there in other countries. If the accountancy rules are followed differently in some other nation, they cannot do so. They are called the principles and standards. Only by following those principles and standards, this financial statement is prepared. I can tell you some other example also. See, regarding the mathematics, I can say, see, we are told this is a plus and this is minus. Had we told this is minus symbol and this is a plus symbol, we will follow it. So, even in languages you say, this is A, this is B, right? Instead of that, this is B, this is A. Had we told like that, we will follow it. So, these are only by having some fixed rules, we can do anything. Everyone cannot follow their own rules. There must be common and fixed rules. Only using those rules, anything can be maintained. And especially in accountancy, there are certain rules and regulations. There are certain principles and standards. Only with those things we can prepare the accounts. That is the point here. Accounting principles and standards are maintained when the financial statement is prepared. And the next one is, whatever the rules and the regulations there, the person who prepares the financial statement have some idea in mind. Only on the idea in mind he will prepare the statement, and therefore the personal influence, the personal judgment will be there in the preparation of financial statement analysis. What it is, I might have assumed that the purchase should be 1 lakh during this year. Yes, I will assume, and I will consider that 1 lakh for the calculation purpose. If some other persons think of it just 90,000 or 80,000, and he will have that idea in mind, and therefore, from the personal judgment only, this financial statement is prepared. Whatever the method of preparing the statement, it all depends upon the person who prepares it. Okay, right. Therefore, what are the features of this financial statement analysis? I repeat once again, this is prepared at the end of the year only, and for the whole organization this is prepared, financial statement is prepared. When the financial statement is prepared, what is considered? The similar items are collected together or grouped together, then only the statement is prepared. And what basis it is prepared? Based on the past record, based on what had happened in the past, what was the price in the past, all those things they consider, and keeping that in mind only, the statement is prepared. And they are following, generally in accountancy, certain principles and standards are followed. I told you so many examples here also. And by fixing the rules and standard only, the statement can be prepared. And finally, the influence of the person who prepare the financial statement will be there in the preparation of the financial statement. யார் ப்ரிப்பேர் பண்ணுறாங்களோ அவங்களுடைய இன்ஃப்ளூயன்ஸ், அவங்களுடைய ஐடியா அந்த ப்ரிப்பரேஷனில் டெஃபினட்டாக ரிஃப்ளெக்ட் ஆகும். ஸோ தீஸ் ஆர் ஆல் சம் 1, 2, 3, 4, 5, 6 features of financial statement. And what are the significance? What are the points which is fixed? What are the significance here? When the statement is prepared, it is important for some people. 1, 2, 3, 4, 5, 6, 7. There are 7 persons involved in it. First one, the statement gives some information to the management, because management is the important part of any organization. It is the one which runs the business. It is the one which guides the business. It is the one which directs all the people what they have to do, what the shareholders has to do, what the employees has to do, what from where they can get the financial assistance, and what directions are given to the shareholders. All these informations are given by the management. How they can give the information? Only after preparing the financial statement only the management can do their duty. The management can do it duty only after the financial statement. Because after the preparation of financial statement only, they will come to know how the business is run. They will have some knowledge about the business. The plus and minuses, as I said in the beginning, the plus and minuses of all the business, they will come to know after the preparation of this financial statement. This is the first significance. Then the important part of second important part is of shareholders. This shareholder, for everything, money is important, especially for business. Money is very, very important. So this is like backbone of the business. So how it is called? The primary person is called, they are called shareholders. And because of these shareholders, because of their purchase of shares from the company or from the business can collect the money for the preliminary things, for the initial things. So the shareholders will be informed from this financial statement. How the shareholders will get? Because they have the person who have invested the money in the name of shares. Our share வாங்குறது மூலமாக தான் அவங்களுக்கு வந்து என்ன கிடைக்குது? பிஸ்னஸுக்கு பணம் கிடைக்குது. So they will try to see how the business is run. They may have the additional interest how the business is run, whether it is run profitably or not. Everything will be seen by these shareholders, because they have only already invested the money into the business. So the second significance is regarding the shareholders. Third one, other than shareholders, there are some persons, those who are having the money in their hand. கையில் பணம் நிறைய வச்சிருக்கிறாங்க. So they want to invest the money somewhere in the business. ஏதாவது ஒரு பிஸ்னஸில் இன்வெஸ்ட் பண்ணணும்னு நினைக்கிறாங்க. In that case, they may or they will try to know what business and in which business the money can be invested. For that, what they will see the business where they want to invest the money is run profitably or not. Whether the business is run at loss, is there any future for the business? Whether the business nature of the business is okay, all those things they will first consider, and then alone they will invest the money or anything else into the business. To know all those information, this financial statement is very much essential, because the financial statement consists of the final accounts. That is, in addition to that, the manufacturing cost, trading account, profit and loss account, and the balance sheets. And these are the three important things from which we can find whether the business is run profitably or not. ஒரு பிஸ்னஸ் நல்லா நடக்குதா இல்லையா அப்படிங்கிறத இந்த ஃபினான்ஷியல் ஸ்டேட்மெண்ட்டை வச்சு தான் நம்ம கண்டுபிடிக்கலாம். ஃபினான்ஷியல் ஸ்டேட்மெண்ட்டுங்கிறது நத்திங் பட் இட் கன்சிஸ்ட் ஆஃப் மேனுஃபேக்சரிங் காஸ்ட் ப்ளஸ் த ஃபைனல் அக்கௌண்ட்ஸ். தட் இஸ் ஃபைனல் அக்கௌண்ட்ஸ் இன் த சென்ஸ் trading, profit and loss account, and the balance sheet. So, for the investors, they need more information. The next one is regarding the creditors. What about creditor? What is the difference between the investor and the creditor? I should tell you. Investors are the persons, those who are having their own money and they want to use the money in a profitable way, and they will find which business is run profitably. They will find and invest the money. This person is other person. Creditor, the persons are ready to, the person or the financial institution, they are ready to lend the money which is who is in need of it, and those persons are creditors. இவன் தான் வச்சிருக்கிற பணத்தை தான் பேர்லேயே இன்வெஸ்ட் பண்ணுறதுக்கு முதலீடு செய்யுது. These creditors are giving us a loan. கடன் கொடுப்பான் யாருக்காவது தேவைப்படும். So whoever comes, whoever asks for money, will they give it? No, they won't give. What they will see, what is the background of the business for which the money is asked for. The loan is demanded. What for what business? They will see that wherever we go, whether it is a creditor or the bankers. If you apply for a loan, if you ask for a loan, what the bank or the creditors will see first to know the balance sheet of the business. ஒரு கடன் வாங்க போகிறோம், ஒருத்தவங்க ஒரு பெரிய ஃபினான்ஷியல் இன்ஸ்டியூஷன்லேயோ பேங்க்லேயோ, அவங்க மெயினாக என்ன எதிர்பார்க்குறாங்க தெரியுமா? யூ ஷுட் நோ ஆஸ் an accountancy student. They want to know how far the business is run successfully. To know the success, if the people comes and says, our business is run successfully, no. And they want to verify the balance sheet of their business, which is certified by the authorized auditors. Auditors certify panna balance sheet apart to the, if they are so satisfied from the statement that is balance sheet, they will try to sanction you loan. So for these two creditors and the bankers, the balance sheet is very important. Balance sheet is a statement showing assets and liabilities of the business, and that the balance sheet is part of a financial statement. So this is another significance. Only after going through the balance sheet and other financial statements, these creditors and bankers will sanction loan, and these people will help the business people. So the financial statement analysis is very important. That is the next significance. Then what for and how far the government is involved in it. The government is expecting the tax from the profit what they earned, what the business have earned. Whether the profit is 1 lakh, 2 lakh, 5 lakh, 10 lakhs, 1 crore, 10 crores, whatever it is, and how much amount is earned by the business, and how much tax should be paid by the business concern. For all these things, the authenticity for the government to levy tax is the financial statement, because this financial statement consists of balance sheet and other trading and profit and loss account. Profit என்ன loss என்னங்கிறத profit and loss account சொல்லுது. அடுத்தது என்ன assets இருக்கு, liabilities இருக்கு அப்படிங்கிறத balance sheet சொல்லுது. From going through all these financial statements only, the government levy taxes on the concern. It should be an authenticated one. Okay, the next one is the employees. Next one is the employees. How the people, those who are working in the business, why should they expecting the result of the statement, financial statement? Only if the business is run at a profit, they can ask for more salary, they can ask for more benefits, they can ask for any other facilities which should be available in the business. If there is no profit in the business, how they can claim anything? And in addition to that, beyond all, they need the surety whether they can work there for a longer period. How do they guess it? And only by seeing this financial statement, they will find it. So how, whether the job security is there, whether the facilities can be given by the business, whether the salary can be hiked, whether the bonus or anything else can be given, all these things they can know, they will find it easily from the financial statement. Even you could have seen in some cinemas that films and TV serials, the chairman or the president of the association, labor association, meets the management or the owner of the business concern. They just rise, see, you earned so much profit during the year, why not the pay hike can be given? Why not you give the facilities to us? You have earned so much from our work, from our labor, from our hard working only you have learned. Okay, therefore you have earned it, therefore why not you give it? All these things we can see in the films and the TV serials. And likewise, the employees are also eagerly looking for this financial statement. And from that only, they can, if at all, if anything is possible, they can claim for it. This is the next one. See, under this heading financial statement, I said already, we have not come to the point analysis which we are going to see in the next class. We are going through what is a financial statement, what is its meaning, what are the features of financial statement, what are the significance of financial statement. Now we are going to see what are the limitations of financial statement. What are the limitations of financial statement? We should do it very carefully here. See, The accounts are prepared based on the information collected from the transactions, from the different transactions. Only based on the information collected, the statement is prepared. But how far the information collected are true, how far the information collected are genuine, nobody knows it. Just for example, you see, instead of 10,000 putting 4 zeros, if it is 5 zeros, 10,000 4 zeros, sometimes it may be written as 1,000, sometimes it may be written with the 5 zeros, whatever it is. And based on the genuineness of the information, the statement is prepared, that the financial statement, that is the trading account, the profit and loss account, the balance sheet, whatever it is, they are prepared only based on the information collected. But we cannot give any assurance on the genuineness of the information collected. In the case, the preparation of financial statement will not be fruitful. It will not contain the true particulars of the business. It will not consist of, this financial statement will not consist of true facts and the principles of the business. So there is a lack of information. And this statement is prepared, already I said, based on the historical fact, that is historical data. There is much difference between what was in the past and what is at the present. 10 வருஷத்துக்கு முன்னாடி என்ன நடந்தது, எப்படி இருந்தது, இப்போ எப்படி இருந்தது, we do not know. In the past, a plot purchased for rupees 25,000 is now sold more than 50 lakhs. So I have seen it. I have gained this experience from my own. So, using this historical data, what was happened in the past and what is at the present, they are comparing it and they are finding whether there is a profit or loss, and that will not be a good idea for the preparation of this financial statement. And therefore, the historical data will not be more helpful, more useful for the preparation of this financial statement. Therefore, it is also one of the limitations. There is a drawback. The price levels are changing often. You are studying economics also. There are fluctuations often. Mostly it is in the big hike. No question of bringing down the prices. See, you take the example for petrol. That is, you can take the petrol for example. See how, when it is procured for just 25 rupees, now it is sold away more than 80 rupees a liter, per liter. How, what happens in the middle? They may tell you this tax and that tax, etc., SGST, then CGST, all those things they may say. But whatever it is, what is the original cost? What was the cost when it was purchased? How much it is sold? So there is fluctuation, there is variation in the prices, and without considering those variations, the financial statement is prepared, and therefore we cannot say this is 10% good or correct, this financial statement, because they don't consider the price level changes often. So it is one of the limitations or drawbacks. Then, next one, when a business is run, we should follow certain principles and rules in the business. So once the products are purchased on a particular day only, say for example on Monday, Wednesday, Friday, like that. The goods are sold on Tuesday, Thursday, Saturday, like that. They have fixed some rules and they should follow it strictly. If they make any changes, the rules, what should be followed is changed, and there will be some utter confusion, and there will be no definiteness in the business activities. No definiteness, only convey available. That is not available most. It is available only little, and it is not available fully. Therefore, there is lack in consistency. See what I said, the financial statement consists of manufacturing cost, trading expense, trading account, profit and loss account, and the balance sheet. These are all certain accounts or statements prepared by the business. It is prepared by the business. And it is not a permanent one. It will be changing often. 1 year business will not be the same for the next year. 1 year profit will not be the same in the next year. There may be increase in the profit, there may be a loss in the business. And therefore, nothing is permanent there. And therefore, here this financial statement is prepared only on the basis of the available information, and therefore it is prepared for the time being, for the particular year. On the particular date only the balance sheet is prepared. You can find the heading there, balance sheet as on. Profit and loss account for the year ended. We are writing the heading. Profit and loss account வந்து அந்த வருஷத்துக்கு முழுசா ப்ரிப்பேர் பண்றோம். Balance sheet is prepared on a particular day, maybe on the last day of the financial year. So on the particular date la prepare பண்ணும்போதும் in that case we cannot say it is a full-fledged information in the financial statement. It is an interim one. It is a temporary one, you should remember. Therefore, only it is an interim report. This statement is only an interim report. That is a temporary report. And there are some external users. Who are the external users? Investors, creditors, bankers, government, employees. Employees also we can leave. Say 1, 2, 3. That is investors, creditors, bankers, and the government. These people are external users. They need the information. For the creditor and bankers, they need the information regarding the profitability of the business. For the government, they need the income of the business for levying the tax. So, for all these things, the financial statement is very much essential. But those original financial statement is not made available for these external users. Therefore, this access, that is getting information, is a very limited one. Getting information by these external users, investors, creditors, bankers, and government, are very limited. They are not getting the true picture of the business. Therefore, this external users' access is limited. If they want to know the profitability of the business, they may ask for it and they will give some information. How far it is true, we do not know. And therefore, it is a limited case. Now, ஒரு business அவனுக்கு வந்து இன்வெஸ்ட் பண்ணலான்னு பார்க்குறோம், அவன்கிட்ட போய் ப்ராஃபிட் என்னன்னு கேட்டால் அவன் சொல்கிறத காதில் வாங்கிட்டு தான் வரணும். Even if they give you a statement, we do not know whether it is true or not. The authenticity, we do not know that. And that is why here the access is limited for external users. And these people are especially investors, creditors, bankers and the government are external users. And I said in the beginning itself, the financial statement is prepared by a group of people or by a few persons. When they prepare the manufacturing expenses, the trading account and the profit and loss account and the balance sheet, their personal ideas are influenced by or forced into the preparation of financial statements. Only the personal idea, the personal judgment will influence the preparation of financial statement. ஒருத்தர் நான் ப்ரிப்பேர் பண்ணுறேன்னா என்னுடைய ஐடியாவை அதுக்குள்ளார கொண்டு போய் திணிக்கிறதுக்கு I will try for it. So my personal influence will definitely there in the preparation of financial statement. That personal influence may be sometimes good, sometimes will not be good for the business. Therefore, it is one of the limitations of this financial statement. So today what we have seen, the heading for this chapter number 8, unit number 8 is financial statement analysis. In this, we are not going to this point of analysis now. Tomorrow we shall see that we have seen only what is financial statement, what is its meaning, and what are its features, what are the significance of financial statement, and what are the limitations of financial statement. Only we have seen. We shall continue it tomorrow. Thank you.